to like from day one of Facebook. But you're always gonna try out new ideas. You gotta just stick to it.
Today, I want to talk to you about a couple different things, and this is really important. You know, when you go into a conference like this, you learn all this random stuff. So we found out today that Michael Good is probably the smartest man in the history of the world, and a lot of what he does, we're going to probably have to have him do this one again. But it's really, really important to take something that you're interested in. So whatever you learn or whoever you gravitated to in this conference, take that and learn everything that you can about it. You know, one of the worst things that anybody can ever do is spread themselves too thin in trading. And so you learn all these little tricks from all these different people, and they all work. And all these people that have come on stage, they're all millionaires. But you're not going to be able to learn all of it, right? Like, just like I don't know anything about any single thing that any of the other speakers do, just like they don't really understand what I do. They understand, but right, we all have our own niches. So it's very, very important to take something, focus on it, and then learn every single thing you can, and then master it. Because in trading, if you're a jack of all trades, if you're just that all-around smart guy, you're broke, right? You gotta know something, and you gotta know everything about it. And so today, I'm gonna give you a tutorial on how I trade the market open, okay? So in trading, you guys, who's into technical analysis over here? Okay, all you guys, almost all you guys, at least all you smart guys. So, technical analysis is the study of chart patterns and setups. So what is a setup? A setup is a list of conditions that must trigger before a trade is taken. So we have these classic setups like flag patterns, right? Flat top breakouts, or all these different types of patterns. And the common mistake that new traders will make is they'll see something that they think looks like a flag pattern, and so then they'll trade it. Or they'll see something that looks like a breakout, and they'll bite at that breakout, and then it doesn't work. And you sit there banging your head against the door and say, man, breakouts don't work right now. Well, there's two reasons that that pattern may have not worked. Number one, you probably didn't align it on multiple time frames, which we'll talk about a little bit. And the other part is that in the trading day, there are three parts to the trading day. There's the morning, there's the midday, and then there's end of day. And each part of the trading day requires different setups. So what you do in the morning, those setups do not work midday. What you do midday is completely different than what you would do end of day. And so matching the pattern with the phase of the day becomes very, very important. Now the open, when I was new, the open got me all excited because you study all night, you get really excited, you do all this homework, and you're taught if you do the homework, you're gonna make some money. So the market opens and it's, right? You buy a bunch of shit at the open and it all goes down. And it's like this just debilitating thing, but you can't stop because you know that's where the action is, because you're seeing all this stuff go up and down, and then it sits there the rest of the day. It just sits there, so you know you got to trade the open, but it is the hardest part to trade because that is where the volatility is, that is where the action is. And so you can see these crazy, crazy big spikes at the open, but how do you control it? How do you not get your account blown up? Most people, a lot of professional traders I know, a lot of hedge fund guys say, well, I don't trade at the first 30 minutes of the open, you know, it's very unpredictable. All right, well, that's bullshit because the reason we're in this room is to do what? Sit around our underwear all day in our homes, work 30 minutes, and then go to the beach. And so that means you gotta trade the open. And of course, that's not really what we get to do, but that's the dream. But the open is where the volatility is, okay? So the open is about one thing, price discovery. Stocks come out with news, stocks come out of patterns, and it's a price discovery phase. The stock is trying to find where it wants to settle. And nobody knows. Nobody knows. that's the spot where emotional buying and selling comes in, and so you get those big exponential moves that may hold or may not. But we have to be able to trade that because that's where the money's at. So like if you go in summer days, people hate summer trading. I love summer trading. But they're right, there's no action in the summer except first 30 minutes of the day. So like my summer schedule is literally trade the first 2 hours and then we go to the beach. Because if I trade the rest of the day, I'll lose it. But you have to know the setups. And so what I want to talk to you guys a little bit about today is two things. Number one, how to trade the open. And then after that, how to achieve your peak trading performance. Because trading is a performance game. It is no different than any type of athlete or high-level employee, doctors, lawyers, anything that involves a lot of stress and a lot of money means you have to be at your peak performance at all times. And so that's a very holistic thing, from the mental to the physical, the whole works. And so we'll go into that, how to really get that going. So let's talk a little bit about the open and what we do. So, who are we as day traders? We talked about this. There's 3 stages of the trading day. The setups for each of these stages need to be managed a little bit different. The open is what I focus on, and so I have a few different patterns that I really like, okay? We're going to talk about opening range breakouts and quick pullback buys. Now in the open, I have 7 or 8 techniques and patterns that I trade. And that'd take 5 hours right there, but what I want to do is talk about the 2 that I use every day that I think are going to be the easiest for you guys to find and replicate, okay? And in trading, remember this: if you can find one setup and you make it your own, and you know how to find it, you know how to identify it, you can handle it, you can go out and make money. Yeah, you may not make $1 million, but you can go out and grind out an income. You know, my business partner, Mary Beth here, I give her the $1 million secret of everything I know inside my brain. And you know what she does with this? She made more money than me last year. She trades one setup all day. Go figure, right? I spend my whole life learning all this stuff. I teach it to her, she does one thing. But that's what's awesome about it, because she is the best at that one thing. So if you see that skinny southern woman over there, hit her up later, she'll tell you exactly what she's doing. She's a great trader. So let's talk about this. So, there's a few different things that I do. You run your nighttime scans, right? Everybody does their homework at night. So when I'm running nighttime scans, I'm looking for stocks that have the basic patterns that I think are explosive on daily charts, okay? Daily charts. I'm looking for stocks that are coming out of patterns, okay? And so there's basic patterns that I trade, like flag patterns, or a flat top breakout, you know, a stock that's basically near highs. It's been testing a level for months, let's say. So those are basic type of patterns that I trade. So I have those type of patterns that I'm looking for. So I put them on a list, okay? The second part, which is what Tim does and Michael Good does, is we're looking for PR earnings plays. So me, I'm a Michigan boy, I got 3rd grade reading level. I won't sit there and read through the contracts and all of that stuff. What I will do is look for the gaps, okay? So when you see a gap on a chart, and I scan for gappers 3% or more, when you see the gap on a chart, there's a good shot that there's a piece of news attached to it. Some type of PR, some type of earnings that's attached to it. So how do you scan for these gaps, okay? You can use any type of software. Trade Ideas is a good software you can use for it. There's a website called thestockmarketwatch.com. If you go on there, they have a pre-market page. Click pre-market, and you'll have literally all the stocks that are gapping up, all the stocks that are gapping down, in order of, you know, which ones are gapping the most. So that's a very, very easy way to look for these bad boys. So you don't have to pay for a lot of software and things like that. That's always going to be a misnomer. Like, hey, let's spend a bunch of money on technology, but I don't really know what to do with it, and I'm going to make a bunch of money, right? I was 30 years old before I spent a single dollar on a tool. Because it doesn't matter, you know? Just because you got a bunch of tools doesn't mean you know what to do with it. So you can use, in the beginning, very, very basic tools, save the money, keep it for a rainy day, because there are free tools out there. So use the stockmarketwatch.com. So when I'm looking at these charts, So you see a gapper, right? Well, what are we looking for on these gappers? How do we know what is the next big winner? Nobody really knows, right? I mean, how do you know? What's the next PBMB? What's the next candidate? Nobody knows, okay? Sometimes good news is bad news is good news. Sometimes no news is no news and good news. But there's a formula for what type of stocks make explosive moves. What type of stocks make explosive moves? The formula that shows the stocks that have made those big runs, the ITEX, the AQXPs, the CANX. What do all those stocks have in common? When we're looking at the gappers, we need to narrow it down, all those gaps, into very specific things. So the first thing that I'm always looking for is the daily chart. Okay? I want to look at the daily chart. Does this stock have a history of making big moves? Okay? See, there's certain stocks that are just big, gigantic turds. So you see, like, if anybody gets your charts up, look at a chart like a stock like EVOK. Every time this freaking stock gaps up, it just fades. It is this gigantic poo-poo platter of stocks. I mean, it never holds. So a stock like that, that's not what I'm looking for. I want to know, does this stock have a history of making moves? Does it have the potential to go and make that parabolic type move that we're looking for? If it doesn't, all right, off the list, okay? We want to see it. So you go back through the history of the daily chart. Does it gap? And does it go? Does it go? Does it have a history of making 10%, 20%, 30%, 40% moves? Certain stocks will show you that they do that. And there's certain stocks like EVOK or CDTI, they just gap up and then they fizzle away. Okay? So those are probably not stocks that you want to long because you'll be left holding the bag. 2, the float. So what exactly is a float? We all talk about it, but what is it? In layman's terms, the float is the number of shares outstanding that can be traded on the open market. So it's basically just a matter of supply. How many shares are there out there that can be traded? So I consider anything less than 100 million low float. Now a lot of the people will try to trade the 10 million or less float stocks. That's true, those will have the history of making the big moves. But in reality, you don't need stocks that just go up 100%, right? Stocks that go up 10% or 20% are still nice moves. The thing about the float is a lot of people think of low float as low volume. They think of low float as a small cap stock or a penny stock. But that's not the whole game. For me, yeah, I'll trade a penny stock if I see it, but I'm in the business of making money. I'm in the business of finding trenders and momentum stocks. So it doesn't matter if it's a $2 stock or a $100 stock. What matters is the movement. So like if you have, say, I hear this all the time. Say you got a $1,000 account. You say, well, I can only trade dollar stocks. Why? Because I can get more shares. Okay, so your dollar stock goes up 10%. How much do you make? $100 bucks. All right, now say you have a $100 stock. How many shares can you buy with your 1,000 bucks? 10 shares. But if it goes up 10%, how much money do you make? 100 bucks. So it doesn't exactly matter the price of the stock. It's just an ego thing of I have more shares. It doesn't matter. The money is the money. So low float stocks can still be $50 stocks, $40 stocks, $100 stocks. Tesla, low float stock. Netflix all these years, low float stock. These are the stocks that are moving, right? The stocks that go on big runs. So it doesn't have to be a $5 stock. It can be a regular old company, but it could have a low float. And that is the recipe for having expanded moves, okay? So it doesn't mean you can't trade high float stocks. So, you know, there's the grandpa stocks out there. General Electric, Bank of America, really any bank. Those have huge float stocks, billion shares or more. So when you see the patterns on them, you know what happens? They go up 2-3% that day. You see this awesome pattern, you get really excited about it, and the range on it's like 20-30 cents. You ever look at an intraday chart of GE? The range on it, so if you put it next to like a low float stock, the stock would look like it spiked. You'd be like, wow, that had a really huge spike on it. And then you look at it and just went 20 cents. That's what happens with the low float or higher float stocks. You don't have any range on it. That's why we like the lower float stocks. But it doesn't matter if it's $100 or $2. You know, you'll still have range. Because you know what's easy? If you have a smaller account, you can trade $20, $30 stock, maybe you only have 200 shares, but guess what? If it goes up $3, $4 that day, you've got some range there. You can trade inside there and actually make money. You could have 100 shares of a $50 stock and it goes up or down $5. Well, guess what? You're gonna make a few $100, and in the beginning, that's the whole game, right? You're trying to grow your account. And so don't always focus on the price of the stock, but the float of the stock does matter. And then clean daily charts. Trading is a supply and demand game. When you have a clean chart, a stock will move in a clean way. So what I mean by that is stocks that are just range bound. Stocks that are just not moving at all, right? Or you gap up into resistance. Well, that's not clean. So when you enter it, it's not gonna move in a clean and predictable manner. You're gonna be sitting there thinking it's gonna do something, but it won't. Because trading is about supply and demand. You gap up into resistance, you're getting hit with the level of supply from top, your trades won't go. That's called aligning on multiple time frames, okay? That is the key to timing your day trades. When you have an amazing daily chart and it's breaking out, and then you've got an intraday chart that aligns with a great pattern, now you've got time frame alignment. Your daily is a go. Your intraday is a go. Now you've got a picture perfect trade. But what happens, and this used to happen to me all the time when I was new, I was day trading. I'm looking for these intraday patterns. Like, oh, I'm gonna buy this dip, I'm gonna buy this flag. And I buy it and I say, there goes my money. Why didn't it work? So then you come up with these reasons. Oh, the market's choppy. Anytime somebody tells me the market's choppy, I know they lose that trade. Right? That is, the market is choppy is the canned response to say I'm a loser in trading. Because there's always something to trade. The market is never choppy. That's the fact. There's always going to be something for you to trade. But if you don't align on time frames with awesome daily charts and awesome intraday charts, then you are trading with one hand tied behind your back. Because the big picture exerts the most influence on a stock. So when you look at charts, we're so focused on what happens on a small minute by minute basis, but that big picture, what's been happening to that stock over the course of a year or 6 months, that's the real story of the stock, right? Not what happened in the last 5 minutes. The real story in a stock is what's been happening in the course of this year. And so having a stock that is awesome on the daily, that gives you the power. That is the wind behind your back. When you don't have it, it is literally like pissing in the wind with your mouth open, right? It is no good. It could be fun if you're drunk, but not really. So we want these clean daily charts. So at nighttime, I run a couple basic scans. One, I scan for stocks that move 4% or more that day. And the reason is that stocks tend to move in bursts, momentum bursts. Stocks tend to move in momentum bursts for 3 to 5 days. So when you catch a stock and it's moved 4% that day and it's the first day coming out of a pattern, okay? There's a good shot that stock has a second day, third day, fourth day, fifth day, whatever, okay? So you can intraday trade that stock again and again as it's coming out of that pattern. But the worst thing you can always do is say, okay, this stock's up 5, 6 days in a row. Now I'm going to try to intraday trade it. You don't have the power there, right? Days 1, day 2, when you get the stock in those days, that's when a stock has a lot of mojo, a lot of movement. So I run 4% breakups, and then I have a go-to stock list. I get 150 names, okay? Stocks that are trending, stocks that have volume, stocks that are liquid, stocks that have been hot that year that I traded, that I know, that I understand, okay? Trading stuff I know gives me a little bit of comfort because I know how that stock works. Stocks are like people, they all have their own small idiosyncrasies. They all have their own kind of patterns in them within themselves and how they behave. So trading things I know is really helpful. So keep a list of stocks that you like. Like, yeah, I'm interested in Apple computers. Okay, put it on your list. I'm interested in GoPro. All right, put it on your list. It may not be ready, but you flip through them every day, and every month or so, one of them's gonna start, some of them are gonna start looking good. All right, so now I've got a list of 3 or 4 stocks. So majority of my plays that I'm trading the next day, they come from the go-to stock list. And so I'll keep a list of stocks from the hot sectors. It's like right now, biotechs have a lot of movement. So I'll have like probably 20 or 30 of my favorite biotech stocks on that list. So then if biotechs are tanking or running, I have a pre-made list of stocks on my go-to stock list that I can flip through and say, okay, this one's ready to go. Or this one's trailing behind, let's take a look at it. And so now I don't have to sit there and do all this intense scanning. So for those of you guys that are new, you ever turn on like your computer, you just get that paralysis by analysis, right? There's so much stuff going on. You're in somebody's chat room and he's going, woohoo, woohoo, and everybody's like, woohoo, woohoo, right? The stock is awesome. Then you're on Twitter and everybody's like, woohoo, woohoo. And then you turn on your platform, you got 1,000 blinking lights, and you turn on your scanners and there's 1,000 tickers, and you're like, holy fuck, what do I do? Where do I go first, right? That's what you want to know. What's my first move of the day? Where do I go first? What do? I turn this computer on, it's 9:30, what's my move? Well, when you have too much stuff blinking, paralysis by analysis, you don't know what your next move is. So having a real focused list of a handful of stocks that come from things that you know will be really, really helpful. I do very, very little scanning intraday. Scanning is like this misnomer. Everybody thinks if I got the best scan, I'm gonna make so much money. But what happens is you turn your scan on, it spits out 500 names, and you're like, holy shit, what do I do with this, right?